Hello, and welcome once again to another amazing Craft Your Future podcast episode. My name is Christopher Nyalwal, and as usual, we have our money conversations right here. We talk from goal setting to budgeting to investing, to purpose, to legacy, to black tax, all things regarding money that involve each one of us. Now, today we're having an exciting episode where we're going to be discussing a particular investment that currently many of us are talking about or thinking about. Now, in case you're wondering which one I'm talking about, in January this year, the Kenya Pipeline Company opened an IPO, initial public offering, for people to come and invest in them. Now, for this discussion, I'm going to be having a very special gentleman from Moran Capital. His name is Titus. And we're just going to dive into what are some of the things that you need to learn and understand from this before you invest. As an investor, the key thing is you must understand what you're investing in and why you're investing in. And is it fitting your goals? And what's the duration of the investment? Is it risky? Is it not? Does it fit in your financial plan for financial freedom? Now, if that's not enough for you to sit down and watch, then you need to just be curious and find out what is it all about. Now, I hope, as usual, in every episode, we'd like you to subscribe to this channel so that you get more notifications on more interesting topics and conversations that we have in future. So let's dive right in. Welcome, Titus.
Thank you, Chris, and I'm glad to have me here this morning.
Welcome, and I'm really excited that you came, and you are from Moran Capital, and maybe just tell us a bit about who you guys are at Moran Capital. What do you do, and maybe also that will help guide us into the conversation about the IPO.
Right, thank you, and it's really a nice opportunity to introduce myself and ourselves. My name is Titus Mwangangi, Senior Analyst at Moran Capital Management Ltd. This is a capital house where we talk much about investments. We manage investments for clients. We have also the risk arm and the real estate part. But particularly here for the investment case, we talk to clients about what's really trending in the market, both locally and globally. We analyze and synthesize information to be able to spoon feed our clients and make them be able to make decisions at what we present to them, because we have an eye of an hawk in the market, both locally and globally. And for that reason, we are very glad to have this conversation. And before we even go further, I want to give a shout out to our CEO, Mr. Alex, our director, and as well, Vera. Thank you for organizing and making us talk about this. So I am very glad to give the whole shout out to the whole entire Moran fraternity. Thank you.
Awesome. I've worked with Alex, the CEO of Moran. We had several engagements with him, and he's an amazing chap.
Sure.
And I really do appreciate, the length that Moran Capital go through in terms of the level of research when it comes to investments, because I know you guys want to give the best when it comes to serving your customers. And it's an amazing, amazing thing that you do. And that's why I'm really excited that you're here, because I know you have, you've not slept for months. As an analyst, I'm sure you have read and researched about the IPO. And that's why I just want to, get your mind on what's this IPO all about. First of all, what is an IPO even in the first place?
All right. This, I am sure, is one of the jargons that is flying around, but it's really good to demystify this morning. IPO technically means initial public offer. All right. Initial public offer is basically a way of a new company introducing its shares in any organized exchange platform. Within the Kenyan context, we have the Nairobi Securities Exchange, popularly call it NSE. So the IPO is basically the primary market where the company which is listing invites interested investors to take stake. Yeah, that's what we call IPO.
Okay. All right. So in this case, Kenya Pipeline it's an existing company,
exactly,
owned by the government.
Yes.
And so now the government wants to give away some shares,
Yes,
part of the ownership.
Yes.
And that's why now it comes to the market, and now you and I can be partakers and become shareholders in that.
Yeah. Just to dive into that a little bit more is to understand the IPO is basically being an offer both private companies as well as parastatals or public companies can as well as float shares.
Okay.
Floating shares, basically for the street man's language, is issuing shares.
Okay.
In this case, with Kenya Pipeline Company, this is a parastatal.
Okay.
So this is a government that intends to sell shares to the public, and actually it's doing that at 65%, which is a shade of for the government holding. So out of 100%, and actually the shares are about 18.173 million, rather billion. So the point is what we are doing, or what the government is doing here, is basically trying to sell these shares. It takes 65%. So it's going to remain with 35%. Yeah. So that is the amount of shares that is floating out to the public. So you and I and any other interest person, could be an individual, could be a company which is institutional, could be what we call anchor investors. Yeah, because those are really key.
Okay.
They actually provide liquidity. We'll delve into more to that.
Okay.
That question come up.
Yeah.
Yeah. So it's really key, and this is what it's happening. So the government is basically raising cash by issuing these shares, about 100 to 106 billion Kenya shillings. That's what the government is targeting.
So the question is, why now? What's the vision behind it?
Wow.
Why would a company list? Just in general, why would a company be attracted to list in the stock market?
That's a very good question, and I'm very glad to answer it.
Uh-huh.
You see, one of the reasons why a company would want to list is, first of all, to raise capital.
Okay.
And I want to be very specific with KPC. You see, one of the items we have in the national fiscal consolidations is that our public debt is something to talk about every other day. We tend to say it's about 67% to about 68.8% of the GDP, which we think, and all the analyst economists are thinking, this is getting to a levels which are kind of not sustainable. And therefore, the government is looking around and realizing, oh, before we could even borrow either locally or internationally, we could actually harness some of the assets we have and put that capital into debt consolidations, physical consolidations, and that's precisely what the government is doing. So the government is raising cash through selling these shares to the public, so that they can get this money and plug that money into national budgets and utilization for major national projects. That's precisely what the government is doing.
Okay.
Yeah. And to issue such shares at such times, it's again a good question, because again, here is a question of capital movements. Remember, we just said on the onset, we look at both local and global markets. It's good to appreciate the point at what time, because we can say we issue IPO, but there's a question of timing. This is one of the best times that we could have this IPO floating around. Why?
Okay.
Because from 2025 up to this time around, and actually largely last year, we've seen our capital market depth really doing very well.
Yeah.
Because remember, right now we have the market total capitalization of about 3.06 trillion. It's one of the highest in history, actually. And for that reason, we as Kenyans, and the capacity to raise capital, it's something to celebrate.
So what you're saying is this: our stock market has actually been performing
really well
last year.
Yes. And to issue this IPO right now is also one way of the government to capitalize on the market capital movements and which side of investments it favors.
Yeah.
Right now, our NSE is one of the measures that are doing very well. Of course, we have about 4 indexes. The Nairobi Securities Exchange All Shares, we have 20 share index, and if you look at them all the time, like we analyze from our work at Moran Capital, you can see the trend and how well it's doing. So regionally and even locally here, we are really doing well in terms of deepening our capital abilities and how well we can raise capital. Kenya is one of the best markets in Africa where you can raise this capital. Yeah, and government is quite on time.
Interesting.
Yeah.
Because, most of the time we've, post-COVID, our focus was really on bonds.
Yeah.
And it's interesting to see that, also now our stock market is also performing.
Precisely.
So maybe let's get more information on Kenya Pipeline. So maybe just give us some information about them. How do they make money? Why are they so primed, as a good investment, or, how do they how are they attractive in regionally and locally like that?
Nice.
Yeah.
It's very good for our views to know, for your viewers to note the reason why this IPO and anyone could really think of it as a viable investment. Remember, KPC, which is Kenya Pipeline Corporation, enjoys monopoly of operations in Kenya. Okay.
Yeah.
To say so, it makes its money by charging fees through transportation of oil and oil products. It also does a storage of the same and handling of the same. So major oil marketers like Vivo and the rest would really contract KPC to transport their oil and even store some of their oil. Of course, we have the oil depots in Kisumu, Mombasa, in Kipevu, Nakuru, Eldoret. All those are facilities belonging to KPC.
Okay.
So it makes money in three ways. First of all, it charges fees as it transports this oil and oil products for some of these major oil marketers like Vivo. And we know with Vivo, we have Shell and the rest.
Yes.
Yeah. Now, it also makes money through storage of the same. Like we've said, we have Nakuru Depot, Mombasa, Kipevu, and all the same. So when it stores, because it imports, remember as a monopoly, it has a calibrated demand level within the country. And within that demand level, who takes what percentage of demand level and how much are they going to store for them? So it will have to charge cash.
Yeah.
I mean, fees on that.
Yeah.
And also handling, packing on all that and making sure it reaches all those things. So it makes money from that. So that's a local market outlook for it and what it has been doing. Regionally, it's very even more interesting to note that it plays quite a pivotal role to transportation and storage of these petroleum and petrol products for countries like Uganda, Sudan, and I mean, East African region.
Okay.
Yeah, it does that. And if you look at it, this is one of the major strategic advantages that KPC is sitting on. And as even the IPO, which is public initial offer, is happening, it is good to be reminded that those are some of the abilities and strengths and opportunities of the KPC that are out in the market that any interested investor would want to get to understand. It's very key. Yeah.
Okay.
Yeah.
So, it's very important that we understand that in an IPO is something that happens once.
Yeah.
So that's the primary market.
True.
Then we also have a secondary market.
Yeah.
Please talk a bit about the secondary market, because we might focus on the IPO and think that if I don't invest at the IPO level, I can't ever invest in it.
Okay, you see, let me put it this way. Everything has got its own first time. So the KPC first time hit is the primary market.
Okay.
Primary market, this is when interested participant in the name of investors shoot this share or rather buy these shares at the already floated price, which is 9 bob currently.
Yes, 9 shillings.
It's floated at 9 bob. But in the secondary market, where now after the IPO is complete and all the shares have been offloaded on Nairobi Securities Exchange and they are exchanging hands from one person to the other in terms of ownership and all that, this is what we call secondary market.
Okay.
So secondary market starts immediately after the end of the IPO. Okay? And this secondary market is participated by any person, an individual person, an institutional person, which is a legal artificial person, can also participate into that. So what happens in the secondary market as opposed to the primary market, the price is not fixed because in the IPO, of course, you have it floated at 9 bob. But in the secondary market, the sheer forces of demand and supply now come in. This is where you realize, not so many people want to sell these shares today. So the supply of such shares in the market is low, and therefore the demand goes up. So what is going to force the price up is when the demand is high. So the exchange and the risk factor, the risk balances of the security, or rather the shares when they are floated on Nairobi Securities Exchange, is actually the one that induces demand or not. But in order to understand that, please, it's good to note KPC and its environs and its advantages like we just painted out. So in the secondary market, the prices are not fixed. The prices are subjected to the sheer forces of demand and supply. Yes.
So hold on there, because I want us to do a flashback.
Okay.
The most prominent LPO that, was also most talked about was the Safaricom IPO.
Yeah.
And, could you just talk a bit about that? Because, for a while, many of us used to just invest in things because they're what's trending in the market.
Yeah.
And then at that time, Safaricom was also seen to be kind of a monopoly, and people rushed in and bought the shares. They were going for about 5 shillings.
Sure.
And then, the trading happened and the prices were very volatile. Maybe just talk about your experience from that IPO, and just so that we because I feel like we need to manage expectations about it.
Very good and very well. It's always interesting when you talk about Safaricom.
Yeah.
One, Safaricom was floated at 5 bob.
Yes.
Okay. So floated as 5 bob, meaning it was listed or at 5 bob. And the shares were oversubscribed.
Oh yes, I think
they were very oversubscribed.
Actually,
oversubscribed. even if I were to mention, part of either family members had some allocations on Safaricom. Some of them even didn't get them. Some of them got them.
Some bought as groups.
Some was bought as groups. Why this? Because it was oversubscribed. So oversubscription here basically underpins the demand to the shares. So why was the demand? One, Safaricom, by then, even now, is seen as a communication telecom giant. So the abilities and the opportunities that were underpinned by Safaricom by then, people ballooned them. People saw them as big opportunities in the future because the strong cash flow in the future is going to be witnessed. Because one, Safaricom came out to bring simplicity in communication. Of course, it's during its time when we had even lines coming down, even communication, and simu za jamii were dropped.
Yes.
You remember all that?
I remember those
all this was
public phones.
occasioned by Safaricom.
Yeah.
And why was that happening? Is because everyone would see what Safaricom was going to be in the future.
In the future, yes.
So that drove
A
the
lot of
demand.
demand, yeah.
Now, as it were the case, immediately after floating those shares, of course, when the demand is too high, then the prices go high.
Yes.
Then people start to think that it's kind of very expensive for them. They abandon the demand in favor of other securities that are probably comparable, and they were really comparable. Then at that point, the demand went down, and we could see the shares by then hit to a low of about 3.
Yes.
I think the lowest was about 2.75 shillings per share.
Yeah.
Then there was one major issue that any interested investor would want to keep in mind. And I think at some point that came to be vindicated. By understanding the SWOT analysis, the strength, the weaknesses, opportunities and threats of the company would really help you to understand your risk appetite and how much of it you can invest in. Because you realize you have about an X amount of cash you need to invest. You realize given its time to grow and what you need, do you have such financial muscles to wait such a big deal of patience and all that? So this is where you saw people who invested in Safaricom for targeting short-term gains were really disturbed, because it did not just peak very fast within the short period, but within the medium term. It even showed the first time the Safaricom share hit the headlines were about 12 bob, thereabout, and then it shoot and all that. So that means we were able, for those who held the counter, some of them were paid more than 100%, 200%, because we have friends, we have family friends who really have the counter. We even have relatives who understand what Safaricom became. Because why? They understood the potentials of the company through the lenses of SWOT analysis. What were the strengths of the company by then, Safaricom? What were its weaknesses? What were its opportunities and the threats? So this is akin to what you're talking about KPC. Before you understand that it is listed at 9 bob, and before you think whether you want or not, need to understand the environment of it, what its SWOT analysis. That is the same thing we want to draw attention to our investors to understand.
Yeah, so maybe you could speak into now the SWOT
All right.
for KPC.
Yeah. Good.
It would be interesting.
Yeah. SWOT analysis, for the sake of the audience, is just trying to understand what advantages and disadvantages that this company posts. What do we know about it that could work for it in the future, that couldn't or probably might not work for it in the future? As I look back, and because I was involved with the team at Moran, we are very proud to do this at Moran. We saw that in the last 3 years, KPC posted profits. Actually, these are audited financial statements, which could be authenticated from the auditor's general website. You can actually find them there. In 2023, this company posted 3.3 billion. This is profit after tax.
Okay, wow.
Then in 2024, it posted 7.41 billion. And then 2025, just the recent audited year, it posted 7.49, just a marginal gain.
Yes.
So in investments and audits and all that, we usually say we want to look into financial statements for a company between 3 to 5 years. If it proves profitability, we want to understand the business model of what we are talking about here is sustainable.
I like that, sustainability, because it investing is a long-term game.
Yes.
It's not about what is it doing today.
Exactly. So this is sustainable.
Yeah.
Because from 2023 up to the last audited financial year, this company was afloat. Yeah. So this is sustainable. The business model is tested. When we're talking about the East African region, it means it has got proven and anchored roots in those markets to be relied on. Therefore, as we talk about its strength from probably from even the local market, it's a monopoly.
Yeah.
So it enjoys 100% with marginal or probably no competition. Yeah, because some of these biggest oil marketers might want to think of other maybe other alternatives or not to get this product, but by and large, this is KPC.
Controls a large market share. Okay.
Yeah. So where I sit and where we sit as Moran Capital, headed by our champion Alex, we tend to think there is very good potential for KPC when you look at its regional and as well as local market strategic advantages. Yeah.
And what about now some threats?
Okay, fine. You see, people would always want to say, and it's good you ask that so that we can clearly explain it.
Yeah.
It's very easy to say that any business that is related in government will always end up to be cash aided and all that, because we tend to think that because sometimes the politics and all that might want to play and to pull strings with parastatals and all that. But I want us not to forget that by listing KPC on Nairobi Securities Exchange is improving on transparency and accountability, which is usually tied up with governance.
Okay.
Anyone who wants to raise capital from the market, like we say, those who come to equity must come with clean hands. Yeah. So those who want to raise capital,
you must be ready to be
must prove to be ready to be audited.
Yes.
Transparency, governance well checked. So this is all what KPC it's communicating on the back end by having it listed on Nairobi Securities Exchange. It's telling us we don't have anything to hide.
Yeah.
We are transparent. We are ready to be audited and to be held accountable by the public. So I think that is a good vote of confidence for the company, actually. Yeah.
It's you had mentioned that it's open to also corporations, companies that come in, and I feel like they have more muscle to buy a good percentage as well. So it means they are inviting more people to the table in terms of maybe discussing strategy, maybe in terms of the future.
Let me address this keenly for our viewers.
Yeah.
In the list of those who can participate in the IPO, one, we have individuals. You and I can actually participate.
Yes.
Businesses, institutions can participate. Even the workers of KPC can actually participate.
Okay.
But more interestingly, what you are alluding to is what we call the anchor investor.
Okay.
Anchor investor is basically also strategic, also institutional. The difference why I am mentioning institutional investor and anchor investor differently instead of being lumped up together because they are like the same is for one reason. An anchor investor look at it as someone who you want to raise capital, and before you consider many other sources, these people are telling you we are in. So these people get into contractual agreement. We usually call them the company voluntary agreements, where they would talk with the management and all those who are involved to understand that out of the 65% we are floating the public, we would buy like 20%. And the reason is one. Those are usually meant to provide liquidity when needed. Such people could be pension houses and large insurance companies. So those ones we call them anchor investors. Those who look at it like at your own personal level, you want some money. Let's say you want 10M, for instance. And you know, you have 6 people within your circle who really know that they can give you 6 million. So you're only left out looking for 4 million. So the anchor investors are like those who can give you the guaranteed capital, and they are there holding it so that they can come to your aid as and when you need it. They are also called market providers. I mean, where you have a need for capital, they can provide. If the share is probably kind of maybe going down and all that, and because all these, they can come in and provide liquidity so that they can keep investors afloat, so that anyone would want to say or would not want to say, I might buy this and hold my capital there. So these are usually done for that cases. Then we have institutional investors. Why are they different from anchors? Because you can have someone who has a private limited company who wants to buy the shares. They buy it as a company. That's an institutional investor, but not necessarily an anchor investor.
Yeah. I didn't know that. That's
that's
quite interesting. Yeah. Okay. So now it's planning to list. Would this affect prices of fuel or things like that? We have to understand even.
I know this is very eminent with Kenyans and the businesses and the industry, but it's good to note that KPC does not influence the prices of. We have IPRA.
Yes.
IPRA is the body that is mandated by the state through an act of parliament. And statutory provisions actually, where it regulates the prices of fuel. So the prices of fuel, if it goes up or goes down, does not have anything to do with KPC.
All right.
It will always have anything to do with IPRA. Because IPRA
Maybe
is
IPRA
the only.
full, I don't know.
It's a energy and petroleum pricing agency. By the government actually. They are the ones who do that. And what influences the price up or down is what we call the global macros. Which probably these are reasons we do not have anything to do about, because if you have Gaza fighting and you have all those people fighting, the prices of fuel per barrel could be 60 the other day. So all this, we will end up having imported inflation, which we will consume here locally, simply because the international market for oil is favorable or otherwise, depending on where we are. Yes.
All right. It's just good to know. Sometimes we're just like,
important,
all these things that they're doing, how are they affecting me as an individual? Okay. All right. So maybe if I can take you a bit back, maybe just explain to us how, a typical investor should look at this thing. Because I know the stock market is an industry that, has cycles. Up, down. And so in terms of me coming into looking at this investment, what kind of time frame should you ask somebody to be patient in terms of with the investment? Sometimes because, as an investor, I may come and say I have some money that I can put aside for 3 months, but then maybe this is not the right investment for a 3 month. Or, I'm basically just talking about how do you match your different investments with your goals. Yes.
I think to answer this question, it's good to encourage any potential investor, you and I and institutions, to understand that your risk profile is informed by many other factors we don't see in the public. Okay? Much as we say they short term, medium term, and long term, these different time frames end up being defined within the context of personal constraints, personal preferences. Okay, standard we say a short term is any time about 12 months not more than that.
Okay.
Medium term, we talk about 3 years, which is basically for organizations for planning.
Okay.
But beyond that is for investing.
Okay.
So what I want to put it clearly here is that one, stocks won't guarantee you profit. Like you are saying, if I invest in 1 year, I am sure I am going to end up with this position at the end of the year.
Yeah.
No. One of the things we like to emphasize for anyone who wants to invest in stocks, including the IPO that is being floated, is that stocks return in the long term. They wither cycles here and there. But that does not underscore the fact that you might want to harvest some of the gains you might have gained because of the market cycles and the capital movement cycles that have placed you at an advantage. And therefore, you can see in 1 year, you actually have made some profits. Maybe if you bought it at 9, maybe it's at 15. 15 minus 9,
Yes.
it's about what? It's
6.
about 6. Then you say 6 is what six gross of commissions, because again, we have commissions about 2.1% and okay. So we say, if I have 6 gross of the commissions that I need to be charged, this is what I need to harvest. One thing you need to understand is that you do not know what time frame will take you to get there. That is why we can't tell you what time is it that you can make. The only thing we need to emphasize is that stocks are usually seen as an investment for long term.
Okay.
The IPO for KPC is basically buying stocks. All right?
Yeah.
Otherwise, or rather, in the same case, we do not shoot down the ability that it can actually go up within the short term possible, and you are able to sell and harvest whatever you could have earned.
Basically, what you're saying is there are no guarantees.
Exactly.
It's about manage your expectations.
Manage your expectations.
Invest only what you can afford.
Precisely.
In terms of...
Yeah. So today, if I wanted to invest in the IPO and I had maybe 10M, I would think, if out of the 10M, I need 6 million, that I know I have to outlay this money for some other activities, then I don't need to touch 6M. But the 4 million, if I know I can wait with my 4 million and all that, that 4 million is what I need to outlay in the KPC IPO. Yes.
So basically money that you can afford to sit and let it park
and wait
for however,
yes,
the time frame.
Yes, but in your wait, if you realize
if you're an active investor, then you can also make your returns. But if you're just holding as well, because also there are models that the most quoted guy, most stated guy is Warren Buffett, the guy who just buys and holds.
It's my favorite book read, actually. Yeah, I have a book about him that I'm reading.
Different investment strategies are there for different people. So it's about you deciding which one are you after.
Yeah.
Because there's some, if you really, really believe in a company, then chances are you'll always be buying and holding. But somebody who's there looking for short-term or medium-term kind of things would be buying and maybe selling when the price has appreciated or
but
not.
Here is the crack of the rock. One, you need to have your return goal. I mean, no one invests without
you must have a target.
You must have a target.
Okay.
If I thought, as much as stocks do not guarantee you returns, but I would sit and think, if I invested 6M that I'm saying out of the 10M, and my return is that if this 6M appreciates about 20%, it doesn't matter whether it is short term, then because again, greed is something that will make you lose also.
Actually, greed is the thing that makes us lose money.
Yeah. So if you get your 20%, you might want to harvest the 20% that it has gained, either reinvest, and most importantly, reinvest when you still know the macros favor the company, the micros also favor the company, the SWOT analysis are on check. You do the investment. If not, you can harvest the 20% and you decide to spread the 20% on some other portfolio elements. Yeah.
I like that. Have a target.
Have a target. Yeah.
Okay.
Yeah.
So as a first-time investor and you see Kenya Pipeline company IPO there, what are some of the things you should know? How do I get involved into this thing? You've been talking about even you and I can access. How will they access it?
Okay. In terms of the first-time investor, first things first, understand why you are going there. Okay, because that's where it's like when you are climbing a building, there is a first staircase. You don't jump that.
Yes.
So first thing, don't jump to understand why you're investing there. Number two, You can buy these shares through the investment banks that have been appointed by the KPC. But most importantly, here, as a first-time buyer, it's good to talk about the cause and the effects.
Yes.
Before we talk about the effect, because effect is you going to buy and how it's. First of all, understand your fundamentals. Yeah, understand how KPC is situated locally and globally, so that you know minus plus. As much as there would be fluctuations, I have confidence level which is impeccable and realizing that it's going to be doing well in the long term. That's what we are advising. Yeah.
So first understand it before you just
That's
make
the
a
entry
move.
point, yeah.
And so that's where people like Moran Capital come in.
That's where we come in,
Yes.
actually, yeah.
So people come to you and sit down and you just actually take them through a step-by-step process of before you enter here, we need you to understand
Very
this and
interesting.
that.
Yeah. Now, I am very glad to state that at Moran Capital Management Ltd, we run very acute analysis to understand what works for who and when. To do that, we have what we call the risk assessment form. It's very easy for anyone to walk in and say, I want shares that will give me 18% returns, 20% returns. But upon clear understanding you through filling in our risk assessment form, which is going to guide us to place you to a certain risk category. Either you can be aggressive, either you can be moderate or conservative. And let me explain the three. An aggressive investor is an investor who is risk friendly. Okay? Risk friendly. So moderate investor is someone who takes risk but with a little bit of caution. But a conservative investor is someone who is risk averse. Yeah. And we have classes of this. When you fill in our risk assessment form, we will get to understand you.
And this also influences their behavior then.
Influences
because
their behavior.
Somebody who's risk friendly, the
Yes.
aggressive one, is able to even sit for a longer period of time.
Yes.
And, let the market play out.
And he does not have to wake up at the middle of the night to understand what prices of the shares
Watching
are.
the news every 10 minutes, what has changed?
Because he's calling a long shot.
Yeah.
And he knows in the medium term, he does not need to get disturbed.
Okay.
Because he knows fundamentally these things are going to iron out in the long run. Because again, like we say, economy grows in the long run.
Yeah.
It could be having turbulence in there, but in the long run, aligning with the government agenda, if the macros are kept in check, like inflation levels and all that. So we tend to believe, and we have seen it, that economy grows in the long run. So anyone who is investing in stock in the long run is usually placed in that category. So at Moran Capital Management Limited, we first of all seek to understand the kind of investor with regard to risk appetite that you are. So you fill in our risk assessment form. Away from that, we have our table that we always update on weekly basis. Which shares have done well. And we call them the major players.
Okay.
So we know these ones hit the target with a confidence level or success level of about 80 and above. Because we know this is how they work. These counters listed on Nairobi Securities Exchange, they have proven to have a track record of performance.
Okay.
But what are their risk profile? Therefore, we also calibrate them with respect to the price per earnings. Because price per earnings means how much an investor is willing to invest for a unit of earnings. So the higher the PE ratio, the higher the risk appetite for the investor.
Okay.
And depending on what they want, we choose from the tables that we have curated. So at Moran, we have...
This PE ratio, is it something anyone can do for themselves? Because I'm just thinking about...
Okay, one, I need to appreciate that
Yes.
no one has monopoly of knowledge,
Yes.
but precisely will be well placed with us.
Okay.
We will walk
No,
you through.
I'm just saying, like in general, like
Yeah.
for example, somebody who is just out there just trying to do their research. Because we said you must also try and understand for yourself. But of course, if we're all limited in terms of the information that we can access. And so I was just curious, is it something somebody can try,
Technically, I
attempt?
would think not.
Think not.
That's why you need Moran.
Okay.
Yes.
I love that.
Yeah.
You talked about performance.
Yeah.
And how in what formats can we, make money from a company that is listed?
Good.
Yeah.
Yeah, 2 ways.
Okay.
You can either be either of them or both,
Okay.
but it's a very thin balance for both.
Okay.
One,
Okay.
for any listed counter on any organized exchange platform,
Mm-hmm.
the NSE now,
Okay.
you can earn through capital appreciation,
Okay.
which we say if you bought it at 9, it might end up at 15. So you
Okay.
sell, you get your 6 bob.
Okay.
That's capital
Per share.
appreciation.
Yeah. Mm-hmm.
2, you can also gain from dividends.
Okay.
But you need to underline something with dividends.
Mm-hmm.
Dividends are not guaranteed
Okay.
until they are declared by the board of directors.
Okay.
And this happens with respect to how much they have earned during the period or what strategies they have. They might also have made a lot of profits, but they may want to deploy all the profits back to the company and the expansion and all that. So you might not end up
So you
having
might
dividends.
not get dividends.
So while we say you can have capital gains,
Mm-hmm.
you can also get dividends payments, but
Okay.
dividends are not guaranteed unless
Okay.
they are announced and declared by the board of directors. That's when they become the liability of the company to pay, because you have announced them. You can't
you can't take it
stand
back.
down. Yeah, that's true. Yeah,
It's good to have all the information.
sure it is.
Yeah, so that somebody doesn't buy saying they've been paying dividends and then now why are they stopping to pay dividends? Restructuring strategy can change everything. Reinvesting, new markets
So
can arise as well.
for the tech also, what we do with at Moran now, this is where now we cut the edge actually.
Okay.
We understand there are 4 dividend evaluation models and how they impact on your price of securities on NSE, like NSE, Nairobi Securities Exchange.
Okay.
So we study the companies that are listed and we understand throughout the history what dividend payout policy is very popular with them.
Okay.
That's very key.
Okay.
And let me explain why it is key.
Okay.
Because it is going to give you confidence to project what's going to be next in the outcome.
Okay.
I mean, for those
So
who
the
love
track
football,
record,
they say
yes.
this has won or that we are likely to win on the next.
Oh, yes.
So a dividend payout policy are some techniques that majority of the interested investors probably don't get to hear very many times. But we emphasize, we do that. We study the dividend payout policies. And we understand this company is likely to take this shape. And is likely to pay dividends based on or underpinned by this dividend policy. Yeah, and therefore, if this is what it takes to pay for dividend, and someone needs to invest, and this is his risk appetite, is this dividend payout backed out by the policy really appropriate given the risk profile? Then we determine yes or no. We choose that counter for them, or we decline it based on that.
Okay.
Yes.
All right. As we wind down now, I just want to speak to an investor about diversification.
Yeah, good.
Because it's important that we don't put all our money in one basket. So even the purpose of us having this discussion about Kenya pipeline is about putting it into a portfolio. It's not about putting all your money there with some expectation. So maybe just talk about that, about diversification, why it's really important if you are to build your wealth.
Sure. Let me first of all explain what diversification is.
Yeah.
Like you rightly put it, we say we don't put all our eggs in one basket. It's the same thing that you are saying. You don't invest all your money in one thing.
Yeah.
Diversification is an investment practice where you acknowledge that you do not need to invest only on one single class of item, class of asset. Why? Because economy has got different sectors.
Yeah.
Some sectors might not do well for one reason or the other. Others will be doing well even at the same time when the others are not doing well. So diversifying is spreading your risks. So that if even if Safaricom is doing well 100% according to my analysis, if I have the 6M now, I do not need to put all my 6M in Safaricom. I can also find some other counters that are listed on Nairobi Securities Exchange that are playing the league of Safaricom or close to the Safaricom counter that are going also to meet my goals. So instead of putting everything in Safaricom, I spread my money among the counters that I will choose. And for the sake of our investors and viewers, a portfolio is basically the instruments of trade or the counters with particular to NSE now, these are different counters, companies that an investor has chosen to trade with.
Yeah.
So create a portfolio.
Okay.
A portfolio that is well diversified.
Okay.
And the diversification of portfolio is not just informed by what you think the market looks like. Is informed by what Moran will tell you to do. Because we'll understand you and we will choose those shares with respect to what is good for you.
What is good for you.
Yeah.
Okay. I like that.
Yeah.
Final parting shot and advice on anybody who's thinking about the IPO, maybe in short.
Yeah. One, remember the last time we had such sensitized IPO was during Safaricom, IPO about 2008, about. And it was one oversubscribed, and eventually it did very well. People recouped very well from Safaricom. So I would want us to mirror the same behavior, understand those who earned from Safaricom, what they did. Because they had patience. A good deal of patience is key.
Yeah.
So for our investors, if you want to get into IPO, please, it is a good advice to have a good deal of patience.
Yeah.
Don't invest what you need in the short term.
Okay.
Invest what you know you can wait for it to grow. After all, in finance, we say it's wealth creation and capital accumulation.
Okay.
You do not create and accumulate you do not create wealth and accumulate capital mostly in short term. And securities and IPOs are one of the vehicles that create wealth and accumulate capital, but they need patience from you.
You need patience.
Yeah.
All right. Thank you so much, Titus, for sharing so much
Yeah.
about the IPO, and as well as just general knowledge that people need to have and
Yeah.
consider when investing. So thank you so much for that, and also the Moran team,
You're welcome.
for the effort and the the extra mile that you go in terms of researching, so that people can have the best in terms of the the investments.
You're
All right.
welcome.
So thank you so much, and I hope you found value in this episode. The main thing that we are trying to address here is understand the investment that you want to enter. Understand the micros and macros that surround that particular investment. Understand your risk profile. Understand that you need to be patient for your investments to play out. And so with this, now it's back to you. What are you going to do about it? Ours was just to give you information, but it is you to make the decision. My name again is Christopher Nyalwal. Remember to subscribe and follow our channel for even more content about investments and money conversations. See you in the next episode.